such property that will do something like that. So the way we look for those deals itself, it's I would say it comes with a defined level of expertise, because for people who are in the capital market, for people who are in the let me say money markets, everybody has people. There are people who are specialized in these places. There's someone who can tell you, for example, now was it how many days ago? There was probably like a spreadsheet of prices that was shared here on FMDQ OTC market for Naira futures. So it means that the market is pricing Naira at probably like 850, 900.
1,000. It's pricing like 1,000.
Next year. So people have their own expertise in this place, and this is where we are very good at, and we've been able to deliver these rates at these very attractive rates for investors.
So if I heard you say 25%, that's APY per annum. Is that what you're saying? Okay, that's what
yes,
you're
exactly. Yeah.
Okay.
So your APY is around 25, 26 now, just off the top of my head, annualized for what is current. So it means that if we can even increase our occupancy rate, and for example, now we are in the mid year, right? This is just July, and our prices are still quite low compared to what we should actually charge. So imagine when the festive season arises, say October, November, December, when the demand skyrockets, right? There are lots of people who are coming back to Nigeria. There are families here who want to take. So the prices will rise that time, and that means that the yield on it will also go up, and the operating cost will stay the same, right? Because whether you like it or not, we run on diesel. Some of our costs are fixed. A lot of our costs are fixed. We know how many times a week or in a month we change. For example, the mattresses, how much we pay our cleaners and all of that. Those prices are fixed.
Gotcha.
But the potential revenue is I won't say limitless, but it's the upside is significant, because we can raise prices, and as Maiwa said, our occupancy rate this month, I think probably Maiwa made it, as the CEO and the salesman, he's quite optimistic about that. But I would probably share, a screenshot of, the report that we sent to our investors for June. I will just share it. So to show people we have basic data number of nights that we were able to sell, total number of nights that we were able to sell, average occupancy rates, then also average length of stay. So, for example, I will tell you hold on. Around 5-6 days, right? So people don't just want to stay for one day, because when they come, they see the experience, they see the value for what they are getting. They want to renew. So that shows that you have product market fit, and the upside on that is significant. So
okay, I got you. Let me ask a few questions, right? So if what I'm hearing you guys are more or less like a corporate. You guys manage Airbnbs. If I could not, let me just put it that way, just so people can follow. You manage Airbnbs,
sure.
And I can invest in you guys to go get more Airbnbs. And what you guys are doing, you are taking away that I have a house in Surulere. I want to do Airbnb, but I don't know the nuts and bolts. I call you guys. You guys can take my house or take my land, run that Airbnb. That's on the side of the owner of the property. But on the side of the investor, I want to get into something that pays me a higher yield. And you guys are telling me that because it's real estate, occupancy, it rises with inflation, i.e. you can sell your prices to match inflation. Because if I want to come to town, I have to sleep. I have to sleep in. So I'm able to then get a higher yield per Naira investing in this quote-unquote Airbnb with you guys than if I just put the money in the bank or even held dollar. That's basically what I'm hearing.
Exactly.
Kami, let me add to what you said. So one thing is there's an optimization problem in the Nigerian real estate market. So take, for example, a developer has developed 20 flats, and he's selling to different investors and even buyers of this apartment, because not everyone wants to buy an apartment to live in there. Some just want to buy and put it up for rent. Now, a developer is selling to different buyers and telling them that you can use it for rental, you can live in there, and you can also use it as shoplet. I'll tell you the truth, it won't work. You won't really optimize as a buyer or as an investor. As a owner, it might not really be a problem, right? Because I personally manage about 6 different Airbnbs for different clients. Eventually, they had to close down. Why? Because they were not really optimizing. Imagine you spending about 50 to 100,000 doing marketing when your entire revenue is around like 300, 350,000. At the same time, you have to, it's around like 500,000. At the same time, you have to pay the manager, you have to follow the apartment, buy diesel or fuel. Anything spoils, the chair can, the TV can blow up and you have to replace it 200,000. So at the end of the day, when you do the maths will not add up. And that's the problem with the Airbnb. If you want to take Airbnb as a business and you don't have multiple apartments, you're not really optimizing. Because if you have a jet that can power 3 flats,
but you're basically economies of scale. Yeah,
you're not optimizing it, right? So that's one thing. And we have been running the Airbnb like an hotel because people come and they say like 15 different flats. If you check our page on Instagram, Crestville Apartments, you'll see that every flat has its own unique design. Some are minimalist, some are sophisticated, some are youthful. We did different designs for different flats. Yeah. So it gives this home away from home hotel feeling, but better value because you have a room, you have a parlor, you have a kitchen. There's no limitation. You're not streamlined to watching just 2 channels on DSTV. You have full access. You have Netflix. You have Wi-Fi. So it's more value. So we realize that we are even like taking the chunk from the hospitality business, not even the Radisson's Blue and the Sheratons, right? The 3-star hotels that we charge like 40, 50K. Their guests now are seeing better values for what we're doing, and that's the real need, and that's the real business opportunity that we have seen, and we're trying to like scale up and build multiple apartments. Now we have finished one in Ilopeju. We're embarking on the next one in Surulere, and we are like 70% sold out because almost all the clients that bought in the Ilopeju project, after getting their returns for like 3 months, they're already like making deposit for the new one because it's something that's still like relatively new. I'm buying, you're managing, you're doing all the marketing, and you're sending in money every month without having to do anything. And this funds come with occupancy reports, occupancy reports, quarterly financial statements, and some of the articles that we write. For example, in like 3 years, somebody comes beside us and buys up the entire house and says he wants to do something like what we're doing. We can easily discuss with all the investors and say, you know what, we want to like increase our price or increase our standard. We all need to contribute or sacrifice this month's return just so that we can also refurbish and increase the value of the property. So it's a business venture. We want the investors to see us as their business partners and not even their facility managers, because the more they make money is how we make money. So the more occupancy they get, we also make money through management fee. So it's a win-win for both investors and we as the developers. Like as Dayo said, we're just starting and we have not really like milked out the opportunity that we have right now.
How many units do you guys manage? I.e., is this a project or units? How many do you guys manage for right now?
Currently about 21.
21.
But when we complete the next project that we're developing in Surulere, it becomes 39.
And this is all in Lagos?
All in Lagos.
Okay, let's talk about the investor side. If I wanted to invest in this, is there a minimum?
So we advise, the one in Ilopeju, we did 1 bed and 2 bed, right? But we then realized that we get more demand for 1 bed and 2 bed. So people will just come in and just stay in the 1 bed because it's cozy and it's less expensive. For the 2 beds, maybe get together, So the one in Surulere, we made it strictly 1 beds. We only had a client that wanted to buy 2 beds because of demand and supply. She feels like, if that's the only 2 bed in the entire facility, then it would make sense for our own occupancy, right? So we built just 1 bed, or we're about building just 1 bed in Surulere. So a unit of 1 bed costs 13 million naira with the furnishing. So it comes with a TV console, a furniture, a L-shaped.
What's 13 million? What's 13 million?
So the 13 million is you're owning that unit of 1-bedroom apartment for 23 years.
Gotcha.
So you
Okay.
get consistent returns for 23 years. So it's a one-time payment. You can pay within 3 to 6 months because we deliver a development within 9 months.
Gotcha.
So it's just one single block of flats. So it's not like multiple flats or estates. So it's just one single block of flats, ground floor, first and second, right? So it takes about 9 months to 12 months with the furnishing. So because of inflation, we usually buy all of our furnishing items in bulk. So that's why we set a cap and a limit to the the payment period. So that's 3 to 6 months. If you're paying within 0 to 3 months, that's 13 million. If you're paying within 3 to 6 months, that's 14 million. Then 3 months typically after you must have completed your payment, your apartment would be ready. We do a launch or a transfer of ownership. Then we set a date for the commencement of the business operation.
Gotcha. So I, as an investor, gets in to buy the property. Is there any fractional opportunity available there?
Oh yeah. So we have some clients that we have some clients that like pooled funds together. So we have because when they send in their emails, say 3 different emails for a single property, right? So we can do that, but it will have to be the investor, pulling funds with people. So we had clients that did 4 million. They just contributed the money amongst each other to one single fund.
So gotcha.
Like a joint account where we send in the returns to at the end of the month.
All right. So you can connect with your own friends or association and then buy one flat, and that's you. So when I buy this flat, I give it to you guys. You guys then manage it, and I get that quote unquote yield.
Yeah, monthly.
Got you. Let's just talk in terms of, is there a guaranteed return? If I invest in this, are you guys going to tell me whatever happens, is this going to be the rent you're going to get, or is it going to be on usage?
I'll tell you one short story, right? So when we started the first project at Ulupeju, we had a client that was all bent on having that in his agreement. So he called his lawyer, and I was like, oh my God, that is what I want, because if you guys tell me 15 days and you guys got 18 days, how am I supposed to know? What if you don't get any clients? How am I supposed to be rest assured that you're giving me this guarantee? I said, okay, no problem. We can guarantee you if you want that. You're not taking any risk. It means if I increase my price, if I do anything, you're not taking any risk. No problem. At 25K times 18 days, we deducted our own operational expenses, and we told him, okay, we signed the papers, but we have like an investors platform, right? So when we sent reports after the first month, the second month, and the third month, the investor realized that all the investors got an average of more than what we promised them at 18 days cap. And now he's coming to the office to renegotiate the terms. So the thing is this, right? There's no fixed return, but the return is proportional to the occupancy, right? Because we ourselves cannot run that place without at least 65% occupancy. Because take for example, we're in Nigeria, there's no light for 2 days, we have to run on diesel. I would not say because I have just 10 guests when I can have 18 guests, and I would not want to power the gen, put on the diesel. So we as a firm, we are even motivated. So sometimes somebody can come in around 8 p.m. and say he wants to stay for a night and is leaving tomorrow morning around 8 a.m. I know very well that no one would occupy that place. And it's offering 20,000, 18,000. Sometimes we accept it because cash flow is really important for us. And when we remit to investors, we put it in their report as discounts allowed. So we are also a bit flexible, looking at the returns, the cash flow, and what we really need to run that place effectively. Because at the end of the day, what really matters to the investor is not really the occupancy, it's the return. The return has to match up with what the expectation was before purchasing the property. So we're a bit flexible around ensuring that the investor optimizes return. We have a cap that at least at the end of the year, you should be able to earn. We send them financial projections. So we don't just sell to them. We have an already drafted financial expectation for the next 23 years. So we send it to them. So it's our own responsibility to ensure that we do above that. And for the one in Ulupeju, we did well above what we even promised before we started running it.
Gotcha. Okay, so the risk there is that I'm basically still exposed to this economy in Nigeria. If there's no occupancy, then I still have my flat, but I don't get the revenues. That's it. Is there any other risk you guys would want to bring up to an investor? What else should I watch out for?
So maybe probably let me just chip in there. I think for Nigeria, if there's a general Nigeria risk, I won't promise you that probably Lagos State is edged against that risk. perfectly edged against that risk because Lagos is big, 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 and I won't tell you one thing Lagosians like enjoyment. Except there's any business, if any business that basically collapses or doesn't, maybe fails to make money or something like that, or goes bankrupt in Lagos, is either one, they positioned in a probably bad location for that business, or they are not doing enough marketing, or three, they are not operating efficiently. So, because in Lagos, basically, we can, for example, the report is outside there on MBS. You know how much Nigerians spend on, consumption per year. Then compare that to Lagos. The percentage Lagos is occupying in that is more than 20%. So, and every day people are moving to this state. People are flying in. Basically, all the 1 million, passengers that are coming through the airport every year, probably 70 to 80% of them are coming to Lagos. So, I feel this is significantly undertapped.
Gotcha.
And I don't think that risk for now. And
so the risk is there.
Now, there's liberalization of the exchange rate. Subsidies no longer there. There's more predictability basically around the economy. A lot of people can plan. So I think the upside is I think for me the upside is there's a lot of potential upside that people us might not even be thinking about now, and so I think it's a no-brainer for anyone, in my opinion.
All right, so the risk is there, but for you the upside is that there's going to be demand there. So let's ask the last question before I let folks speaking. A few guys have been waiting here. In terms of the overall direction of the real estate market, we saw how Airbnb changed America, changed the way you book hotels, the way you travel. Do you think this trend of short leases is here to stay, and does it pose a threat to the traditional hospitality in Nigeria? I know I've seen this happen in Nnewi. It's a big boom now in Nnewi, and also in Enugu. In Abuja, this is very, very big in Abuja. I know a few guys doing this in Abuja, taking homes, converting it to one-bedroom flat. In their own cases for rentals, because Abuja doesn't have a lot of 1 and 2 bedroom. But you have a lot of folks that earn enough but simply can't get a house within the Abuja metropolis. So people get these 5-bedroom luxury homes and convert it to 1-bedroom, self-contained, that these banker boys can stay in. Do you think, just general view, what's your take? Do you think that the hotels are in trouble and this is going to be a trend, going to take over, just like how it happened in America?
Okay. Thank you very much. Okay, Maya, you want to? Okay, let Maya answer.
I'm like the chief marketing officer, so I oversee the entire marketing, and this is what I can pick from my experience, operating this for the past 3 months, right? So the hotel business might and might not be affected, right? But from the data that we have currently, if I throw this to everyone listening here, would you go and pay 35,000 naira for a single room hotel when you can pay 25 to 30,000 naira for a room and parlor? 9 out of 10 would want to stay in a room and a parlor. They want to be flexible. They want to move around. Now, when we chose the first location at Elukwejo, Kalu, you can quote me. I think some of the people that listened to the Twitter space at the time, that was 7 months ago, they visited the property and they told me, they said, Mayowa, it won't work. Nobody will come here and pay 25,000 for a 1-bed and 50,000 for a 2-bed in this area, because the houses around were not Lekki standard now, brown roof bungalow houses around. And they said it would not work. People won't feel secured. But one thing I told them was, because the short-let market is a lot of money to be able to buy a property, you now convert it to short-let. So typically, the average price for a short-let 1-bedroom in Lagos is 45,000-50,000, very good standard short-let. So I told the man that yes, the environment might not really be befitting, but what we are going to do is going to be good value for money. 30,000 naira, 25,000 for a single room. People will come. The guy said, no, it's not possible. And in 3 months now, we have done the impossibility. We realize that people have been overpaying for what they really don't need. Yeah, people talk about security and whatnot. We provided security in the entire street. Before we got in there was really no, it was just, or not there, like Yoruba would say, it's just traditional men that they pay 20,000. We and got like security uniform men. We mounted the entrance of the streets. We had the security in the premises, 2 of them, 2 at the gate. And, we made it secured with our own, phones and everything. And when we started posting online, we started marketing. People did not even visit the property, Kalu. They saw the pictures online. They saw how the building was, the interior, and they compared it. About 2 years ago, or last year when I came down to Nigeria, I spent 40,000 for this standard, and it's for 25,000. It kept paying online. It was when they came in and they realized that, oh wow, the environment is really not that nice. But I think you guys have done an overall job, and our data speaks volume. 6 days retention, average retention time. So despite the fact that the environment wasn't like Lekki or VI or a typical, Marriott hotel standard, people still saw value for what they paid for. And they kept on coming back and reevaluating why they paid 50,000 previously before they checked in this apartment. Like I was saying, 3 days ago, I was discussing with a guest that saw the ad on Twitter, and he said he was about to pay 35,000 naira in an hotel in the Ikeja. And he remembered that he saw one ad, and he called immediately. Do you still have this apartment available? I'm coming for 2 nights. He drove all the way from Ikeja despite the fuel subsidy. He drove, he wasted his phone, came all the way from Ikeja to Ipeju and stayed for 2 nights. So, when I experienced that, I called Dayo immediately. I said, Dayo, we have a product market fit. We need to scale up quickly, get more project running, and try to revolutionize this market. And let's see where it gets to. But right now, I think the demand is way, way above the supply, especially on the mainland.
On the mainland.
Okay, so maybe I should just do some, extra like data-driven. So I think a lot of people forget that Nigeria, let me say, income demographics is stratified. So you have, I think probably anyone here has probably read this Dr. Ola Brown's article, Nigeria 1, Nigeria 2, Nigeria 3, Nigeria 4. So this is it. Whenever you are doing a business, you need to know who you are appealing to. And you need to know how that, demographic is growing. For Lagos now, basically, I will tell you that our target market for Lagos is at least 4 to 5 million people. If you look at the percentage of people who basically earn, let's say like 200, 250, 300,000 naira per month. Someone who is earning 300, 250, 300,000 naira per month can comfortably, maybe 2 days or 3 days in the month, can take out, say, 50,000 naira to just enjoy themselves, rest in one place. So when you have like that potential market of 3 to 5 million people, and you can capture just 1% of that number, and the bulk of them, the majority of them, more than 60 to 70% of them reside in Lagos. You can capture just 1% of that number. Do you know how much your turnover is going to be? I think was it one day someone said a lady who was who started an hair business, basically sold her business for $500,000. Was that probably like 1 or 2 years ago? This is not someone she was selling to the mass market, basically. She wasn't even selling to she wasn't selling the high priced hairs, the 500, 600, 700, 800,000 naira hairs. She was just selling the ones of, 20, 30 something. And look at these millennials, Gen Z. Nigeria now has, our population is skewing towards below 25, below 20 years. Average median age now in Nigeria is around 19 years. So you look at these people, and these guys, they are ostentatious. They want to live that life even before they get to that level. And when you can bring that price a bit, but you give them the qualities of service that they can enjoy even at an higher price, but that one that they can't afford. But you can bring that price a bit to them and make sure that, your own economies of scale make sense, but you can just get that mass market demand. So I believe this market is growing, and we are data driven. We're a data driven business basically, and we don't just take land anywhere. We don't just build anywhere. Basically, there's a lot of analysis. There's a lot of market, and there's a lot of feasibility analysis that we do. before. So it's not just something that anyone can just come in one day and just build somewhere. And there are a lot of people who have called us and we just went there and just said, nah, we can't build it. So we know what the market wants and we are continuously tracking. I think even in the next 5 to 10 years, depending on the market dynamics, we are going to switch the model. I myself, let me say, a finance stroke risk management person, and I that's my own aspect of the business. Mayowa is the sales guy, is the marketing guy, right? So I am continuously looking at this data every day. This is what I'm looking at. Thinking of. So there was a day that someone told us that, there are a lot of people who are rushing, there are a lot of developers who are rushing to the mainland. I told Mayowa, okay, no problem. There's this area that we're looking at. Let's just go there. When you focus, and I tell you that even if the dynamics change, if short legs, for example, is not, we switch it and we just make sure that the economies of scale of the business makes sense and we continue to deliver. So that's our own target. We are not just salesmen, basically. We are also data driven, and so that's how we run our business. And we as we scale, we are also going to be putting more like tech enablement to the business, basically. So
all right, great. Okay, I want to open up the floor now. So I think I've gotten a few points. Let me open up the floor. And I know Skifo has been waiting. Ekene has also been waiting. Let me see if they have any questions to ask you guys. Skifo, you've got the floor. Go ahead, sir. Skifo, can you hear me? Or can I get Ekene if Skifo is unable to speak? Ekene, can you want to hop in real quick?
Okay, let me hop in. Can you hear me, please?
I can go ahead.
Okay, so the question I just want to ask is that,
What happened?
I think we lost him, basically. So I've shared a snapshot of the data in the comment section. You can just go take a look.
Okay. Skifo, can you speak? I don't know what's happened to you.
Sorry, can you hear me, please?
I can hear you, sir. Go ahead.
Okay, I'm saying that if the lease is for 25 years, for instance, what is the... Can you hear me?
Yes.
Yeah, I'm saying that if the lease is for 25 years, now Mayowa is here with his colleague, and they're actually selling this product very well. Now, the question is, who else is behind, the company? How well structured is the organization to ensure that even beyond, these two gentlemen, we're still going to be able to get value because, anything can just happen to, an organization. So I just want to know what will happen. How well structured are they? Beyond them, can this business still last? Can it continue for under 25 years and, deliver returns to, the investors? Thank you.
Good question. He's asking, I need corporate governance, that sort of thing. That's where his questions are going towards. Like, okay, people invest with you.
I understand that. Thank you very much. So, of course, we are, let me say, I would say a small business, small, medium business size. So, we have some level of governance. We have like a board, right? We have the person who's our chairman is, let me say, he has like over, 18 to 20 years experience in consulting, in oil and gas, in finance, basically in Nigeria, and he's kind of experienced in that place. So we have some level of corporate governance that we follow, and we've also like developed like an upper structure now that's going to be managing all that assets. So that structure is basically what we've designed, and that's what we'll be using to interface with the investors going on. So that structure now is, I wouldn't want to probably like say the name of that now, so nobody goes out and probably like so I just want to make sure that I'm not revealing too much, but I want to promise you that we have a board, right? We're also trying to bring in, as we grow bigger, right, as we have more predictable revenue, we are going to institute a lot of those structures in. and bring in more experts as we are able to even attract more investment. Now we have like about 2 to 3 projects in the pipeline. So one, reach out to some of these asset managers in Ikoyi, in VI, who are looking to like diversify. So we are trying to scale up now. So we are very, very well interested, open to that. And if they want us to institute, they want to even place people on our board to make sure that their investment is secure, we are willing to have that structure in place. So if they want to even place someone from their own system to have like probably like a non-executive director from them on the board, we are open to that to make sure that this lasts. So we have some level of corporate governance that's even, that basically like 90 to 95% of SMEs in Nigeria do not have. Most SMEs are run, one-man business. So we are not like that. This is a partnership one, and also it's it has a measurable oversight, considerable oversight for the size that it is. Basically, looking at Nigerian standards. So we are, and we have insurance. Basically, all our investors' investments are insured. So all of those things are in place. I want to assure anyone who is working with us that your investments are secure, and we are putting in every effort to make sure that this your returns are sort of guaranteed. You own this asset. So it's that's just it basically. I don't know if Maiwa has more to chip in that area.
No, that you are saying it all.
Excellent, good job. Let's get Ekene. I think was it Ekene or Skibo that asked that? Ekene, you were speaking and your mic went off. Did you want to ask your question again?
Hello, good evening, Carlo.
Hi, Ekene, how you doing?
Thank God. I really don't have a question, just basically a contribution. I don't know if that's welcome.
Sure, go ahead.
All right. So basically, when we're talking about rental incomes in Nigeria, a whole lot of times we are mostly focused on a single demographic, which has always affected real estate generally in Nigeria, which is the luxury end. We talk about sublets, we talk about buying expensive properties and all of that, and promise so many returns and the possibilities these luxury properties produce. But with everyday increase in the news, we see that the numbers are showing that Nigerians are going down into poverty. Life is becoming hard and things are difficult, and as such, many people can no longer afford these luxury housing. Of recent, one of the things we are doing is when we're talking about rental income to property tech experts, we discuss how do we make this easier. One of the major problems why rental income isn't, or rental housing isn't producing so much returns in Nigeria is because of the funding backing the incomes. A lot of respect and kudos to a whole lot of people out there forming small communities or cooperatives where people can put money together for investments, like what you call fractional real estate. But then a whole lot still needs to be done by creating more open room for funding so that we can now begin to build properties that are designed for rentals. Like you said earlier on, you said you don't know how much in Abuja is being done about people taking up these luxury 5 bedrooms and converting them to 1 bedroom, 2 bedroom. But then when you look at the demand for these 1 bedrooms and 2 bedrooms and compare it to the price after converting, it takes a whole lot of time for you to break even on profit. Sometimes you're looking at 30 years because these properties are very expensive when you buy them. When you still break them down, even at monthly payments, they are still extremely expensive. So except there is a new funding system, there is a new design in our housing market, we need to now build properties with these mindsets that, with the mindset from the development stage that these properties are going out for rent. Now we build properties we want to sell. When we sell it to people, we tell them you can convert it to rent. But these properties were not built as a rental structure. They are very large, they are very expensive, and when you buy them, you can't easily convert it. So a whole lot of times we need to do a whole lot of re-education, and most of it starts at the development stage, where we have to look into the type of properties we are building and build properties that are specifically for rent from the point of development. Okay. The investors coming in are coming in. Yeah.
I got you.
Okay. So the investors coming in are coming in to bring in their on specifically to build properties that are for rent.
Okay.
No other side place, no other deviation. These properties from the start, the adverts out.
I got you. I got to rotate the room.
Working on a few of them. Yeah.
I got you.
Okay, all right. No
Yeah.
problem. But that's my contribution.
Makes sense. So you're basically saying that we have to build from purpose ab initio. So the design, the construction is built for rent, so it's in and out, like how we have in the UK, flats and all that kind of stuff. It's a good point. It's a good point to make. Let me get.
Probably I should address something you said. So,
Okay, go for it.
I think just very short. I think something I gave a comment to the Guardian some months back. Exactly when we were launching this Ilupe edition Lex. They asked the question around that, and I think in President Tinubu's manifesto, he said something up. They have like an housing policy, and I don't know how serious they are about launching that policy, and I don't know how but I think with the momentum he has come in with from the beginning, I think he probably wants to do this. This is what he said is mostly going to be dependent on government policy. Developers will tilt towards the market that can pay for their product, and they wouldn't want to take too much risk to develop for if you go and develop a lot of buildings for rent and then you don't find people who rent those places, that's somewhat so. And also, if you don't get people who are going to like buy, because if you also want to sell those places and release some of those burden on owning those assets yourself. You want to leave those assets, so you want to free up those assets to other people to own, the way we do it, like fractional selling, right? So if there is no government policy that helps in defining the the financial space around that and the financialization of that kind of thing, and for example, if we don't have like say a mortgage program, if we cannot bring down inflation significantly, so banks can loan to people to buy houses, so this policy environment is very critical for something like this. If not, there will be no scalability. So most developers will still probably tilt towards the luxury market, or do some small time work in areas where they know people still have some disposable income to pay for this. So that's just it.
So in long and short is that if I have money to build, right, I am going to build where I can get my capital back with returns. If I borrow and build, I think we had a guy here that was building homes in Abuja, and he was saying they used to build off plan, and he said they stopped building off plan because when they do the off plan, as they are going on, it's no longer profitable. So it's better for him to go to the bank and borrow at the high interest rates and sell the home at the high resale price and make his margin than trying to make a difference between selling early, building. So he made that point, and I think it's what you're also saying, that Nigeria is so unpredictable. Prices go up, inflation is 22 today, that you really can't plan with this off plan. You have to build what you can sell and get your capital back. Good point. Let me get I am Eri Oluwa in here. How are you doing, sir? You've got the floor. Hey, can you hear me? Okay, why is getting himself ready? Let's get real estate bond. I got real estate bond. Go ahead, sir.
All right. So, I just wanted to ask questions to the speaker, but let me address the
go
last
ahead. If
contribution.
Go ahead. They'll hear you.
Now, can you hear me?
Yes.
All right. So, as per why developers aren't building for rent, I mean, this is not a charity. Everybody's looking for the best exit, right? Mm-hmm. Let me give you an example. So we want to start a new project. We are looking for land. We want to start, wanted to get Ikate, but we can't afford Ikate anymore. Ikate now, for 1,000, Ikate is about 300,000 naira per square meter now, right? We are now pushing down to Osapa land, and we can't still find, properly priced land. Mm. We are seeing on registered land, 1,500 naira. 1,500 square meter going for 200 million plus, right? Now, what do I want? I won't build it and come and dash it to you now. I have to maximize my profit. So let's say, for example, now typically to build a standard 2-bedroom, about 120 square meters is going to take me ordinarily 150k per square meter. So let's say somewhere in the range of so let me quickly do the maths. I want to get to something. Okay, so it cost me ordinarily 18 million naira, right? That's 20 million naira is what it costs to be this, standard two-bedroom apartment of 120 square meter. But then I'm buying land, undocumented land. This land I also have document for 200 million naira. I will spend probably another 20 million naira to get the papers, right? Then spend another 30 million naira to prepare the lands and filling and everything before we now start the construction. So what kind of what arithmetic do you want to place for me to come and give you cheap rent? So as a developer, the easiest exit for me is to sell that property to somebody else, and then those people now try to now get the rent. But you see, there's many of these clients that buy this property to rent, they end up reselling it because the rent doesn't make any sense. Like if you're buying a property for 60 million naira and you're trying to get 10%, 6 million. Nobody's renting the house because people cannot just afford it. And then what you're getting offers 3 million, 4 million. Then it no longer makes sense to you. Somebody's not thinking, rather than waste this money in Nigeria, let me just go and buy property in London or somewhere else. So that is the point. There's no charity. People that want to do that, you can go to if you go to places where land is cheaper, you see a lot of houses for rent there. There's nobody renting there because people don't want to live that far. If you go down to Bejulek, if you go down to Songote, there are a lot of properties for rent there. But people want to live in this expensive area, but cost of land is not cheap. I know developer will come and build something for you and then come and
Good
but
point.
That is that. Then to the speakers, it's a fantastic idea you have, but I'm looking at it as a developer now. And it doesn't make sense to me. Like, how are you getting your returns? Because I'm assuming you're building these houses, right? What is the source of the funds, right? And how are you paying back these funds? So you're selling each apartment for 30 million naira for 25 yearly. So basically, you're getting into a JV agreement with the landowners. So how do you get the funds to build the house? Then how do you pay back the landowners? Because I believe they are not just dashing the house without anything. There are some returns they expect probably every month, every year, while you're running that 25 years. So how then do you run this, manage the short legs, then still pay back your investors? I mean, so just enlighten me. It looks like a lot of work.
Okay. So, from your page, you're a real estate developer too, right? And you wouldn't expect me or my partner, to put out all of that numbers in the public. We are currently managing a lot of apartments, and if it is not profitable, we would not be in the market today. We would not be building our third project and doing millions of revenue. And I wouldn't reveal that to you or to any of. I think the only person I can have that conversation with is an investor that has made some deposits and would have access to agreements with the landowners.
Interesting. So, but let me just also ask, right? The modeling that we talked about when we started was that you basically go to the house owner, you take the lease from the house or land owner. When you then own that property, you then develop short leases. You then get investors to come into those short lease business and invest their own capital. You use the capital from the investors to build out the property, and then investors then get the return. You get your management fee. So it looks more like your main capital is to acquire the investment in the first place, but your working capital comes from the investors that basically are funding your, should we say, the development out?
Not entirely. Yeah, not entirely totally being funded. Totally, we're not like totally funded by the investors. So we have like short-term investors that want to be involved in the entire development stage and want to exit after 1 year. So as I speak right now, we have like the entire fund to complete project, like funded by some investors, and after, because we make like profit, selling off the lease, and then long-term profit, managing the apartment on behalf of the investors, right? So some investors come in and, short-term, after construction, after sale, they get their profit and capital back.
Gotcha. Okay, good point.
Yeah,
good point. So let's get, it's a great question you asked. Let's get I am Erioluwa in here.
Mr. Carlo.
How
Thank
are
you
you?
so much. I'm excited to be here tonight because I remember the first time they came around and explained the model. A lot of people challenge them because they don't know it could work. I know. And even though they had some difficulty in actually explaining it properly, then you have seen how far they have come and how much they have grown. The truth is, if you can't bet on their integrity, or if you can't bet on the integrity of any real estate person, don't invest with them. That's just it, because there are some nitty-gritty that they can't actually explain more than what they can give you. But when you look at what they have explained so far and what they have given out, you would know. And I really had to raise up my hand when the other person made mention of the issue of having to build a house for renters and this and that. It's practically impossible, because these are government functions. And I'm happy Mr. Carlo, another person, did explain, because if you try to actually do charity with it, then you will realize, as it is right now, anybody doing real estate building or development in Lagos and is not doing this model or not doing exact short-let model, it is practically impossible to make back your money, let alone actually doing long-term rentals. So it's impossible. The government will take care of that. The business people will take care of business. But I just want to say shout out to you guys. You are doing amazing work. Thank you.
Okay, that's a shout out to the guys from AM Realty. Let me also ask you a question, guys. If you don't, not to do with AM Realty, just overall, right? If you were to compare the return on, say, bonds, equities, real estate, if I was a young man, I just started work, I have 1 million naira, maybe my uncle gave me, I have that 1 million naira with me. Just your own view. Would you put it in a bond? Would you put it in equity, or would you put it in real estate? What's your take on this? If someone asks you that question, what would you answer?
Okay, thanks for the question, Kalu. So, firstly, you have to think of what do you want to achieve. What is your goal, right? Are you looking for something in the short term? Are you looking for something in the medium term? Maybe you want to finance, a car, or maybe you want to buy a nice car in the next 2 to 3 years or 4 or 5 years, or you want to secure your future, your retirement. Those are the kind of things you are meant to think about first, and also depending on the environment. For example, bonds, for example, are risk-free. Government bonds, for example, are risk-free. So those ones are already defined. So what you are now looking for is something that can beat it. You are looking for a premium, as I said before. So are you trying to, if I was a young person, right, maybe 25 years, I have 1 million naira to put, I think I would just diversify. Basically, I would put, say, 20% of that to probably real estate, right? I'll put another maybe 30% of that in, say, equities. I don't now want to go too deep into whether it's US equities or Nigerian equities, or you want to invest in the broader market. All of that, those ones are, let me say, more sophisticated decisions that you probably have to talk to a financial advisor to probably understand that. But just off the top of my head, I think it's just best for you to diversify. Maybe you can just put in a broad ETF, or if you are looking for a good entry price. Now, I think the crypto market, for example, is completely dead. Liquidity is gone. So if you are looking for a good entry price into an investment that you are targeting, say, 5 to 8 years, I think crypto, for example, now is probably a good entry price. As good entry prices, you should buy. For equities, it's been a bearish market in Nigeria for many years now from the previous government, and I think now that the market has been liberalized. For example, probably a lot of foreign investment is going to come back to FPI. Hot money is what they call it, right? They are most likely going to come back. I know that the when I used to work as a research analyst at one of the investment firms in Lagos, I know the stock exchange, the NSE, or I think they're now the NGX, right?
Yep.
They publish what's called domestic and foreign investor reports. So those are things that you should also look at before you invest in. So you should just do your research, basically. But I would still advise a young person to diversify, right? But real estate, cash flowing real estate in Lagos, I'll be specific about that. It should be cash flowing real estate. Because capital gains, again, I don't know where you want to
cash
find capital
flowing.
gains in
Interesting.
in Lagos, because where is the money to buy that very expensive 40-50 million naira land upfront, as the real estate bond guys said, how to fork out that money upfront is a lot, right? So you should look for something that will give you cash flows. So, something that has probably like a lower, a reduced barrier to entry. So that's what you should be looking for. Cash flowing real estate is better than anything else in Lagos now, and that's, for example, that's what we do at AM Realty. We also know how to structure the capital gains plus cash flowing deals, but we are very, 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 as you said, as you look at the title of this, let's talk about maximizing rental income. So we are very, very, very particular about cash flows. It is because inflation is ballistic in Nigeria, and you need money now, not in the future.
Oh my God!
So that's the reason why capital gains do not really.
And let me add to what you just said in like 30 seconds.
Go
so
for
this
it.
is my own personal experience with a client that bought a property 2 years ago on a 20-year lease. He has gotten about, say, 2 million naira on that property for 2 years. But as of the third year, he had the projected returns had increased by like 15%. And when he wanted to sell, he sold higher than the price he bought it 2 years ago, despite the fact that his ownership on that property is reducing. So you got a property at, say, 5 million for 20 years, and you've got a rental for 2 years, and you're selling for 6.5 when the lease is remaining 17 years. So you've gotten positive cash flow for 2 years, and now you're selling with capital gains. Why? Because we help the client to resell, and the way we resell is by projecting future returns. So how then do you value property? Nigerian markets would value property based on how much they put into the property. So if you're building for 35, you're selling for 45. You don't really care if the rental there is 1 million. Right? So the way we value our property is projected cash flow. So we are not overpricing any of our assets. We are not overpricing it because the price that we put on the property is based on the current market dynamics, like how much you can possibly make in 1 year, in 2 years. So if how much you can possibly make after the third year is 20% more than how much you got it at the time how much you're making at the time you bought it, then you have to make more money from the capital gain, right? Because the projected return now is higher. So it's still capital gains plus cash flow for us.
Gotcha. Okay, good point. I like I like the way he said diversification, which is just the correct answer. You really just have to have a basket in Nigeria. If fixed income goes up, property saves you. If property doesn't go up, maybe equity saves you. But Nigeria is a very, very dynamic economy. Let's put it that way. So you want to be diversified. You want to be very mobile and nimble. Take advantage of opportunities. Let me get John Oyegbite to come in here and speak. I think he's been waiting. John, you've got the floor, and then we'll start to round down towards the end of the session. John, go ahead.
Thank you, Carlos. Yeah, I've been following the real estate space, especially with AM Realty and the Cresville. Just a quick question as regards people that want to invest bit by bit, but their earning flow value is greater than Naira, and you also want to make the same equivalent amount of money from investing.
Ooh.
So I'm investing in a couple of deals, and I have kind of spare cash. Yeah, I'll just give an approximate of, let's say, ₦1 million per month just to invest. What's the structure as regards making an equivalent amount? Is there any structure in place? I'm writing this question to Mayowa, I believe.
So are you asking that if you want to invest maybe as a payment plan, can they do that for you?
yes, not only as a payments plan, but also getting revenue, not equivalent, but an average equivalent of that particular money.
That's a good question, and that's what I asked in the very beginning. I was like, is there a space for? I don't want to own this building, but I want to invest. Is there a window for me to say I have 500K, I have 1 million? I like this 25% you're talking about. Can I drop my 25%, my 1 million there, maybe in you guys' own pocket, and you guys can pay me the return? Is that something? Is it out there?
Yeah, that's one of it. For example, I think one apartment or one space is like 13 million or thereabouts.
Yeah.
And they definitely want to make this money at this point. But you are very sure, or if they have done background on the investor, that this person is capable to, put his money at so period at every month, and you want to start making that money at that point. Would you get the return just from at the point when you start making the deposits, or it's until after the completion of the whole money?
Gotcha. Let's get them to answer. Let's get any of them to answer. Go ahead.
Okay. Yes. So typically, you can spread your payments within 3 to 6 months, and the development span is within 9 months. So you still have like 5 more months to spread your payment, and 3 months after full completion, you start earning your returns. And the lease doesn't count until the property has been delivered to you. So that's why we go more years than we are subleasing to our investors, so to cater for all unforeseen circumstances that might come up during development or even pre-development.
Gotcha. So for his second question, let me ask you my own question. Is there a window for guys that want to put money in to invest and get this yield, but might not be interested in the property itself?
So Dayo will be in the best position to answer this.
Okay.
So for now, I would say because of the market dynamics and the environment, I would say it's better for people like that to look for partners, right? Because we can't really finance that for the scale of what we do and the the sales cycle, the development cycle. We always need that cash flow up front, working capital. That's what we call it, working capital. So it won't be efficient for us to take small, money that's not like, at least our prices are not too high, right? As I said, we're selling a 23-year lease for 13 million. So that's not too high considering what other people sell in Lagos. So, but if you want to buy something like that, you can partner with 2 or 3 of your friends like that who are quite savvy, and it's a great investment for you. And from there, you have an asset that you can put and go to a bank and tell them, oh yes, I have this asset that has been giving me this kind of income in the past how many months. You can get it, and from there you grow your income. We don't really have a financialized environment in Nigeria where we have these mortgages like what's in the US, where people can go into something like this with just 20% upfront, and then they just spread out the rest, and the bank takes the risk. The bank itself packages these products and takes it to the capital market and sells it off. That market, that structured market, is not here in Nigeria, so it makes it more difficult. So that's the reason why a lot of developers don't want to take that risk to take money from. So if you are looking for those fractional investing opportunities, it is still better now. So in the future, I know we are thinking of by the time we see what's in the market and we see that there's a lot of, we have like far more projects in our pipeline, we can bring in probably like I wouldn't want to say much around that, but just something that can give opportunities for this kind of people to.
I got you. Makes sense. Let me also ask you a question before I bring in Kriska. What about for foreign investors, or what about maybe hedging the Naira? Is there any discussion around if I have dollars? Maybe you could answer by saying, what is the next step? Maybe I should ask you that question. If I want to invest, maybe I live in the UK, what do I do? What's the next step? Do I contact you? Do I DM you? What should I do? And the second question is that if I'm investing in dollars, can I get paid back in, say, Forex? Now that there's a forward market, are you guys thinking in that direction to say, hey, we'll guarantee you that if you bring in dollars, we can buy you out in 3 years, 2 years? Is that something you guys are thinking about?
For the contact aspect of it, I think Maiwa will talk about that. But for the delivery returns in USD, so we are working around that now. We know that some of the people who would like to buy from us are also, for some of the people who have bought from us are not in Nigeria too. So we have a lot of foreign clients too, that Nigerians abroad who have invested with us. So what we do is, now that the market has been liberalized, we would work around that because, it's over the years, it has been very difficult for people to exit their investment, most investors. So, but for now that the market has been liberalized, we are going to work with some and probably be able to repatriate funds for people who want to invest. So now I think we will be able to do that easily with the current currency environment.
Gotcha.
So
all right.
Maiwa can talk about the if you want to contact or buy from us.
Next steps.
Maiwa will be best positioned to talk about that.
And if Maiwa can hold on, I'm just going to get. I hope it isn't dropped off. I think he has dropped off. Yeah, so Maiwa, go ahead. If Maiwa gives his comment, I think we'll just maybe round it up. Maiwa, what are the next steps? If I'm interested.
All right, so our Twitter DMs are opened, so they can contact us via our Twitter DMs. You can also call me directly. I can drop that in the comment section. 081 6399. I think even our AM Realty Instagram page, my contact information is there. And that's of our VP Marketing, Vivian. So they can reach us via Instagram, via Twitter, or even send us a DM via Crestview Apartment, because we have two different pages. The one for the investment is AM Realty, and the one for the shoplet itself is Crestview Apartment. So if they send us a DM that they would like to invest in the apartment, whether through Crestview Apartments Instagram page or AM Realty's Instagram page, we'll be happy to give them the room. We have 5 units available right now. We are 70% sold out. 50% of our clients return back to buy Crestview prior to it. So,
gotcha.
Although we have some pipeline projects that we'll be launching in the next couple of months as well. So the floor is still open.
Gotcha. Okay, guys, we'll spend about an hour, but let's take Teke. Teke is going to be the last speaker. Oh my God, I didn't check. Then we'll just round it up from there. Teke, go ahead, sir.
Thank you so much, Carlo, for your continuous spaces, bringing some of these gems that that are so hard to find in Nigeria. I really appreciate it.
Thank you, sir.
Your handle is one of the few ones that I pay close attention to for this reason. Thank you so much.
You're welcome.
To the gentleman here, I was listening in and out, so I may have missed some things. But I heard you talk about your investment portfolio where you have 23-year investment. So I have a question for you. For a property that is maybe 90% complete in, let's say, Lekki, and the owner just built it originally for your traditional, twin duplex rental income. And they're about 90%, but are noticing the market dynamics now, and knowing that this is not going to work, and that craziness that we have in Nigeria, where you lease it out for first 4 years, and after 6 years you're in court, trying to recoup rental income that the person has been staying in for a while. What kind of platform do you guys have for such people that have investments, properties like that are almost complete? It's not too late to make adjustments to and to put it as part of your properties that you guys manage. And are you guys looking to invest to do the same thing outside of Lagos, like say Asaba or somewhere, environments of that nature? Thank you.
Good question. What I hear him asking is that, at what stage do you have a cutoff to say we can take over, or really, can you guys take over? Maybe that's what I hear him asking. So,
Sorry, I actually didn't get the full. A call came in, so I don't know if that you heard this question.
I think what he's asking is that he's got a property, say in Lekki, it's about 3 bedroom, the traditional he's building for rent, and I think it's somebody trying to say how can he convert it maybe to work with you guys? What do you guys look out for? What is the cutoff point? Is it already too late? I guess that's where he's going.
Exactly. Yes. Okay, so he wants to like maybe convert it to like a shop rent.
Correct. Yeah. Correct. Yeah.
Okay. So like there are like so many dynamics around shop rent. And one thing I'd say, like Airbnb typically, the way it was structured, I mean, at the very beginning is you have a 3-bedroom apartment or a 3-bed duplex, for example, and you are just staying in one of the rooms and you want to let out 2 of the rooms. You already own the asset. You just want to make extra cash flow. That was how Airbnb started, right? So running Airbnb or Shoplet as a business, like you're running an entire duplex or an entire apartment for Shoplet, might not really be profitable in the long run. It still now depends on whether there's a facility management firm running the entire facility as a Shoplet, right? So that's different. But picking out just one flat out of many to use as Shoplet, sometimes when your operating expenses is so high, the numbers might not really match up. So what we do for situations like this is we go and do a thorough research on the property, its environment, and how much you can possibly make. And if we have that data, we can then structure a management agreement with you if you're interested.
So I mean that makes sense. That was what I was going to say. I mean, get in touch with them. There's not going to be one size fits all answer. Get in touch with them. They take a look at the property, the location, potential yield in that area, and I think that's where they're going to give you an answer from. That's what I would say. Get in touch with them, bro. All right, guys, I think it's been a good session. We've had AM Reality with us here, Mayowa and his team, just talking to us about maximizing or trying to squeeze out that extra bit of naira from our property. I've made this point before. Property in Nigeria looks like an investment. When you dig into the numbers, you begin to ask yourself, when you invest all that capital, all that time, all those fees, what is actually your rental yield? Because in the end, if you're an investor, that's what you're looking for. Rental yields, especially in locations like Lagos, Abuja, Port Harcourt, are very, very low because the cost of building is very, very high. You make more money if you have an existing property in Mushin that you built in the 1970s and you are renting out at today's rentals than if you build a brand new house, maybe you built it 10 years ago in Lekki. What's the rental income you're going to get? So when we get discussions like this, it's very, very important. Even if you're not going to invest with AM Realty, you also understand how you can maybe start to think about your future development. You hear them talk about 1 bedroom, 2 bedroom. That's where the market is. There's also time Nigerian mortgage refinance companies try to buy mortgages. So they are asking consumers what kind of mortgages that they would like to buy from what the mortgage that they were holding. The overall number was 1, 2, and 3 bedrooms, especially 2 and 3 bedrooms. That's where the demand is. The 4, 5 bedroom folks are taken care of. They have multiple homes. They can buy wherever they want to go to, like just using a word of English. But the 1, 2, 3 bedroom is where the demand is, and there's lack of supply. How many 1, 2, 3 bedrooms you see going up in Lagos or in Abuja, for instance? So if you are trying to build out, this is a great, great, great way for you to do it. Is because you can easily convert into a short-term lease. You can also convert to just a traditional rental because there's more demand, so you get more avenues to turn around that property and to increase yield as inflation goes up. So always focus on the yield, the rental yield, not just the asset value itself of the property. Property is worth 100 billion. We are not arguing that. But what's the rental yield from that 100 billion? That's really the question you want to ask yourself, right? So if it's not going to give you yield, then you don't want to do that property investment. And this is a good way that we've seen that you can actually maximize and get more yield from that property. So excellent discussion this evening, guys. Thanks for coming in. Guys, just to...
Can I add something?
Sure, go for it. Real quick.
All right. Just for Teke, just an advice. I mean, you can think about it. So, basically, because I also have shortlets too on the island here. Typically, what moves them is the location and then the size of rooms. Like anything outside Ikate, Victoria, and Lekki Phase 1, you're going to struggle with, probably Ikate, you're going to struggle with very low occupancy rates, right? So I don't know where your property is. And then anything outside 3 bedrooms. So what moves is 1, 2, or 3 bedrooms. But that's an idea somebody shared with me. I haven't tried it. Now I said it's just for something for you to think. Because, so basically, how I put it, what we typically, or people that typically come for apartments are, people that want to organize parties, games night, birthday parties, bridal showers, video shoots, content shoots, right? And there isn't really anybody doing something in the area of creating a space for this kind of people. Now, because of the kind of people that come for the usually young people, so most short-let owners don't usually allow them use their space. But I believe with I'm suspecting it's a duplex for what you described, a twin duplex. So I believe if you structure it in that way, targeting those people, you're able to see something. I mean, somebody shared this. Like I said, I've not tried it before. It's just an idea somebody shared with me. I just kept it at the back of my head, whenever the opportunity comes, probably. But that's something to think about. Yeah.
Super. No worries. Yeah, we're always open to new ideas and, of course, to collaborate with everything we hear, right? So, again, thanks, guys. I appreciate everyone that has tuned in. Again, just to close out, I'm also working on this agri tech and finance events. We're doing with the Code Crash Crop, hashtag Code Crash Crops on Twitter. Essentially, we're asking folks, young folks, old folks, guys that are interested to grow agriculture in Nigeria, to bid, to pitch, to get a prize of, say, $10,000 group to be shared if they pitch something in agriculture, tech, or finance. So if you want to go to Twitter, hashtag Code Cash Crop, it's already on Nairobi, Ibadan, and Kaduna. And we're going to have, of course, the closing event 12th of August, but it's a great way for us to get involved in agriculture, even if we're not farming. All right, folks, AM Realty, do you want to close out the session by saying thanks to everyone that's listened up, and then we'll basically round up. The floor is yours to say thanks. Maiwa or...
Thank you, Kandu. Thank you for everyone that tuned in. We're looking forward to working with any prospect interested in our offerings. And in addition to what we discussed, if there's any opportunity, if you want us to consult with your project, we are more than willing to help you on that. Thank you very much.
You're welcome. Summary is they buy properties or they lease properties, then they turn around and make you an investor in that property. I heard them quote an average yield of about 25% APR based on rental income, also based on offtake, based on occupancy. So it's not a guarantee. It really would go up or down based on occupancy. I think it's a very, very good way to beat inflation in Nigeria. They've talked about how they are structured. They have about 21 in Lagos alone to move to about 39 if their latest project goes in. So I think it's a good model. They seem to understand what they are doing, and it's always a good idea to get in at the very bottom of a rising trend so that you are basically there and then you can take advantage as everyone then rushes in. You are already an early investor and you are reaping. Returns would fall as more people understand this should we say idea. For now, there's a high yield because there's no supply. Once everyone knows about this and supply comes, and of course the yields will start to close out. So it's always a good idea to get ahead and to invest if you find a good partner that you can work with. So AM Realty has been shown to be a good partner, and we do like them coming here to share that insight with us. On that note, guys, I'm going to let you guys go enjoy the rest of your weekend, whatever city you are in. I wish you guys the very best next week, and you guys should have a great day. Thank you so much.
Thank you very much, Kalu. Appreciate everyone. Thank you all.
Yeah, you're welcome. Have a good one. Thank you so much, guys, and bye.